Hi everyone, I'm William Lewis, Head of Commercial for APAC, and I'm joined today by Hugo Batten, our Managing Director for APAC. In this episode, we're going to be sharing some insights from our Philippines power and renewables market forecast, as well as the Filipino power market in general. Right, let's get into it. Over the last few years, Aurora has expanded our coverage to include the likes of the Australian East and West Coast, Japan, the Philippines, Taiwan, Korea, and a number of others. With rapid decarbonisation agendas being laid out across Asia, what was it about the Philippines that ultimately stood out, leading us to model the region?
I think there are both short and long-term drivers that are creating a lot of activity in the Philippines. On the short-term side, the relaxation of foreign ownership laws, the introduction of green or GAP auctions, and the introduction of reserve markets, ancillary markets, where prices have been quite high for the initial period, which is a price signal for batteries in particular. I think over the longer term, there are a series of structural drivers that we think are probably more important. One is that the Philippines has a genuinely dynamic wholesale market, but there are a number of routes to market for generation and storage assets. The second is more on the supply side. So a coal moratorium, so coal coming out of the system over time, building of new transmission under the National Transmission Development Plan, although some of that transmission has been delayed, shift in gas supply, so particularly the Malampaya gas fields running down and imported LNG going to become more of a feature of the supply mix moving forward. A real growth in demand as well. So government forecasts at anything between 6 and 7% per annum. Aurora slightly more conservative at 5%. But when you look at per capita energy consumption, there is going to be a lot of growth in the Philippines. And then finally, probably structurally high wholesale prices. So when you look at the last few years, prices have been anywhere between 6 and 8,000 pesos per megawatt hour. So somewhere between 110 and 150 USD per megawatt hour. And again, that creates opportunities for technologies whose LCOE can come in under that.
Awesome. That's really helpful context. And perhaps let's double click on the comment you made regarding the growth in demand of 6 to 7% per annum. Now, 6 to 7% per annum is an equivalent of a doubling in demand over 13 years and a trebling in demand over 20. If the Philippines is to see this demand growth, it's going to have to build a material volume of new supply. With the coal moratorium in place, how do we see the generation and storage mix evolving over time?
Yeah, let's maybe talk through the slide here. So you can see at the moment there's approximately 30 gigawatts of generation in the Philippines. 70% sits in Luzon. About 12 gigawatts of that is coal and about 3 gigawatts of gas. When you look at Aurora's forecasts, it's really a three-part story. So first is coal coming off over time to be replaced with some gas, particularly to meet rising demand. The second part of the story is a real boom in renewables, to some degree constrained by the amount of spare network capacity. We'll get to that in a second. But first of all, solar booming because it's lower cost and relatively easy to build, then onshore. And then over the longer term, we think there is an opportunity in the Philippines for offshore wind as well. And then the third part of the story, I think, is the rise of what we call flexible assets, so particularly battery and peaking assets to help manage the intermittency of renewables. We do think there's also going to be growth, for example, in hydro and geothermal, but that's the kind of broad trajectory moving forward, we think, of the supply mix over the next 20 or 30 years.
Now, building 120 gigawatts of new supply, an amount equivalent to the east coast of Australia at the moment, the NEM, that will be tough. What do we see as some of the roadblocks to building that new supply?
Yeah, in terms of roadblocks, I suppose I'd point to 3 or 4, and we've just finished 40 or 50 meetings in Manila with clients really on this topic. The first comes back to spare network capacity. So the 2023 Transmission Development Plan does have a number of grid augmentations. We think that could unlock up to 90 gigawatts of new renewable capacity. But from the 2022 to the 2023, we saw lots of delays, and it's just generally hard to build transmission. So that's probably the biggest and the one we hear most about. The second is supply chain bottlenecks. So CapEx in the Philippines is anywhere between 20 or 30% higher, say a country like Australia. So we really need to fix some of those supply chain challenges as well. And then the third are kind of policy settings. So for example, running regular GAP auctions and making sure that assets that win those auctions are delivered on time and hopefully on budget. I'd say the fourth that we hear a lot about from overseas players is just finding the right local groups to partner with to navigate the complexities of things like grid connection and regulation. But that's more for the international players. So those are the 3 or 4 primary challenges I'd point to.
Final question. Overhauling the supply stack like that will have a material impact on prices. How do we see this playing out in the WESM over time?
Yeah, in terms of prices, it's worth pointing out that the WESM, has seen a lot of volatility over the last few years, and over the last couple of years, prices have fluctuated anywhere between 6,000 and 8,000 pesos per megawatt hour. Under Aurora's central scenario, we see long-term prices at between 5,500 and 6,500 pesos per megawatt hour, kind of gently sloping upwards. But we think that hides quite a lot of volatility and complexity. So, for example, when we look at that rate of solar growth, we do expect to see an intraday duck curve emerging over time in the Philippines and becoming particularly more acute in the cool, dry season and probably less acute in the rainy season, given volumes of renewables and relative demand at those times. I won't run through the full range of scenarios Aurora runs, but in a low scenario with lower commodity prices and lower long-term demand, we tend to see price outcomes at about 4,500 pesos per megawatt hour. In a high scenario, which is the flip side of that, prices coming in at 8,000 pesos per megawatt hour. So they're the kind of sensible ranges that we'd put on outcomes in the wholesale market in the Philippines. Maybe as a final point, I'd just point out that the 2-hour intraday spreads in the Philippines, to pick an example, have been pretty healthy over the last few years, so anywhere between 8,000 and 16,000 pesos per megawatt hour. So there's a real arbitrage opportunity there for 2-hour batteries. That doesn't factor in wheeling charges, which are material in the Philippines, and can really move battery economics around. But when you add that to the new reserve markets where prices have been high, we do think there's a real opportunity for batteries, and organizations like the San Miguel Corporation are aggressively pursuing those opportunities. That is a really important price outcome that we model and take very seriously.
Thanks, Hugo. That was great. Of course, please do reach out if you would like to know anything more about today's content. But until next time, thank you.